Okay, now that we know about gross pay, we're going to talk about the deductions that can come from our gross pay out of our paycheck. So I want to start with this example from Unit 5, Section 1. So Mr. Williams' pay slip contains the following earning and deduction information. So here's his gross pay is $309.60, and that was added by looking at his regular wages plus his overtime wages. So that gave us his gross pay. So now we're going to look at those deductions. So we said we're going to have some Social Security tax come out, some Medicare tax come out, federal income tax, state income tax. So those are the required tax deductions that get taken out of our paycheck. And then hospital insurance, that would be kind of a voluntary one that if you have insurance and you want money to go towards your insurance, that would be like a voluntary one that you would have deducted. So then we're left with our net pay, which means our kind of take-home pay once all those deductions are taken out. So we started with this $309.60, and by the time we went through all of our deductions, our take-home pay or our net pay is $261.97. So again, that was just an example of what it's going to look like with your gross pay minus your deductions. And so now this video is going to focus more on those payroll deductions. So those payroll deductions are amounts withheld from an employee's gross earnings. In this section, we're going to learn about all the different types of payroll deductions. There are two types specifically, those that are required by law and then those that the employee can choose. So like, for instance, that insurance. So again, payroll deductions are the amount withheld from an employee's gross earnings. Businesses are required by law to withhold income tax and those FICA taxes, so Social Security and Medicare, from paychecks. In addition to the required deductions, there are a number of voluntary deductions that are often available as a service employee. So this is what a payroll register is going to look like. We have the employee name, the allowances, which we'll talk about when we talk about withholdings and the tax forms, total number of hours worked, the rate per hour, so their regular income, their overtime, plus their total, then their total gross pay. Then they list out all the deductions here. So we have Social Security, Medicare, federal income tax, state income tax. This looks like an insurance account, any other deductions, and then so that it's going to total up those deductions, subtract that from your gross earnings, and you're going to get your net pay. So right now we're going to look specifically at these deductions here in this section. Okay, income tax and exemptions. If you have a job or if you've ever had a part-time job before, you probably had to fill out a W-4 form. And what this W-4 form does, it declares your withholding exemption status, or it's a certificate that shows the government, okay, here's what I need withheld from my paycheck. Actually, it shows your employer, I should say, what you need withheld from your paycheck so that your employer can do so. So again, federal and state income tax are required deductions. Taxes are withheld from each paycheck in accordance with gross pay per check and the number of exemptions claimed on the employee's W-4 form. So until an employee files the W-4 with the payroll department, the maximum deduction will be withheld in accordance with the law. So until you get this form submitted to your employer, they're going to withhold the maximum possible from your paycheck. So make sure you get these turned in right away. Let's see, clauses of income tax deduction. So a taxpayer is usually allowed one personal allowance and one allowance for each person that he or she supports. So when we talk about allowances, and you'll see this on line 4 here is the number of allowances this person is claiming. The more allowances you claim, the less that gets withheld from your paycheck, but then you might need to pay in more when it comes time to do your taxes. So some employees are exempted from federal income tax withholding. An employee is not required to have income tax withhold if he or she did not have a federal income tax liability in the previous year, expects no tax liability this year, has income of $700 or less, and cannot be claimed as a dependent. So there are some exceptions for you to be exempt from federal income tax. You don't have to worry a lot about this right now. I just want you to kind of focus on really making the calculations for gross and net income. But this is all good information that you should kind of be up to speed on. When we talk about Social Security and Medicare taxes, So this section explains a little more about your money that's getting withheld for these FICA taxes. So again, FICA covers Social Security and Medicare. Employers are required to withhold federal income tax plus 1/2 of the Social Security tax and 1/2 of Medicare tax. So together, you and your employer are going to be contributing to both of these taxes. So they take half from you and half from the employer. Federal law requires deductions for Social Security, a percentage of pay as determined by the Social Security Act. So there's a certain percentage that's going to be deducted from your paycheck. Reported, I'm trying to look for the important stuff here. This just kind of explains what your Social Security tax money goes to. The old age and disability insurance programs provide income or retired or disabled people and their dependent children. So it provides some monetary support to the retired or disabled individuals and their children that they have depending on their income. And then, let's see, employees who are exempt from federal income. Okay, so sorry, again, I'm just kind of scanning here to really see what I want to tell you about. The Social Security tax, so you're going to get charged 6.2% of your gross pay is going to go towards Social Security. 1.4% of your gross pay is going to go towards Medicare. So you have a total of 7.65% being deducted from your gross pay. So again, your pay before taxes is going to go towards these FICA deductions. This is what's called a tax table. And so this shows you if your wages fall between, say, 110 and 115 for a weekly pay period, and you're claiming so many allowances, then that's how much, then they show you how much is going to be withheld. So if you're making between $120 and $125 a week and you're claiming 0 allowances, then $11 is going to be withheld from your paycheck. And you can see the more allowances you claim, the less gets deducted from your paycheck. So check out that tax table there. And this next page talks more about, we said the employee pays half and the employer pays half of what goes towards Social Security and Medicare. So again, the employer must pay a matching amount of FICA taxes per each employee that they have. Okay, so then there's unemployment unemployment taxes. Employers must also pay state and federal unemployment tax. So this is employer-based only. So state unemployment tax is the SUTA, federal unemployment tax is the FUTA, and there are certain tax percentages for each of those as well. Again, and when we go to do our assignments, they're going to give us this information anyways. So I don't want to go into too much detail, but just to kind of be aware of what it is that we're going to be deducting for these taxes. The wage base for the FUTA is $7,000. Employer is liable for only the first $7,000 of compensation paid to each employee per calendar year. So they are only required to pay this percentage on the first $7,000 of compensation paid to each employee throughout the year. Historical Social Security employee tax wage base. So this table is going to show you what the employer pays through the theory of tax incidence and the entire 12.4% in payroll taxes paid to the employee, half directly to the government, half in form of lower wages. So this kind of just shows you the maximum Social Security withholding per year and how the percentages has, because this percentage can change, but obviously it hasn't in the last 12 years. So that's just kind of what that table is showing you. Okay, so again, federal income tax, state income tax, FICA, covering Social Security and Medicare, are the required deductions. And now these are some other voluntary deductions that you could have taken out of your paycheck. So employees may authorize deductions from their paycheck for, maybe you want to put some directly into the bank or into a certain savings account. Maybe you want some to go directly towards savings bonds or donate to the United Way, any type of fee that you want it to go towards. You can also have money go straight towards insurance or, again, a savings plan, anything like that. So payroll deductions cover employee premiums for group insurance. If you have insurance with your company, then they'll take some money out automatically to go to insurance. But basically, so these voluntary deductions are, it's kind of that out of sight, out of mind method where if you just have money go towards these things automatically, then you don't have to worry about paying them later on. You could also have some wage attachments. So this would be like garnishments. Garnishments would be properly authorized garnishments require withholding pay based on a formula established by law. So this could be depending on if your paycheck is being garnished, it means that they're taking money out for a specific reason. So maybe you owe money towards a certain business or to a certain business. Again, I don't want to go into a lot of detail. So in our assignments, it's going to tell us exactly what we need to account for. So if there's a garnishment that we need to account for or a levy, then it will let us know, and we'll just have to, again, deduct that from the gross pay. And so whenever you have a form for garnishes or wage assignments or levies, they need to be turned in to your payroll department, and it will be confidential. So no matter what it is that's getting removed from your paycheck, all that information is kept confidential. And that is all I wanted to cover for this video. Next video, we're going to look at the actual payroll records and forms.